What's up, everyone? It's Scotty with Money Investing. So welcome on board for another Market Open live stream here. So the QQQ down a little bit, about 28 basis points. So once again, we're seeing a little bit of a sell-off here pre-market. We've got the SPY down close to 25 basis points and the Dow Jones also dropping over 31 basis points. Just let me know in the live chat if you guys can see me and hear me. Just want to make sure that everything is working well, the audio and the video, and we are not having any technical difficulties. So going over some of the updates here. So this is the Fed's new dot plot. This was actually released as part of the minutes. And you'll notice that we have till 2024, almost all members expect in the FOMC to raise rates between 2 and 3.5%. Over the long term, of course, interest rates are expected to be somewhere between 2 and 3%. So that right there is going to be, of course, the market's pricing in a lot of rate hikes moving forward. And this right here is going to be next year in 2023, where majority of members expect rates to be between 2.2 to as high as 3.5%, and of course in 2022. So this year we're expecting rates to be somewhere between 1.5 to as high as 3% right now. This is going to be the Fed's balance sheet. So we have discussed this briefly in the past. Of course, coming in since 2020, after all the assets buying mortgage-backed securities and treasuries that they've been buying, that has artificially kept interest rates lower, has now ballooned to close to $9 trillion in assets that the Federal Reserve has on its balance sheet. And that's what's going to start to unwind now moving forward on the tune of close to $95 billion, $60 billion in treasuries and $35 billion mortgage-backed securities each month. And that's going to be a way for the Fed to kind of shrink its balance sheet a little bit, push assets off its balance sheet, have it run off. And that's going to put pressure on the price. Prices come down, yields go higher. That's the inverse correlation between prices and interest rates. Warren Buffett's Berkshire Hathaway reveals a major stake in HP. Tech soars 15%. So they basically, Berkshire Hathaway putting cash to use and buying over 121 million shares of HP, according to an SEC filing, and the stake was worth roughly $4.2 billion based on Wednesday's close, amounting to a stake of about 11% for the company, and the stock is right now up close to 12% last time I checked. So HPQ, this right here is going to be up over 11% right now. Let's see. So moving forward, we got Ford will continue to struggle as chip shortage lingers. Barclays says in downgrade. We got Guggenheim saying Cathie Wood's favorite Teladoc can jump more than 40%. So getting a little bit of an upgrade there for Teladoc, and right now it is up close to 1%. Ford right now is down close to 2% on that downgrade coming in. So Guggenheim again initiates Teladoc as a buy. Morgan Stanley reiterates Disney as overweight. We got JP Morgan reiterating Apple as overweight. Wells Fargo downgrades Wayfair. Goldman Sachs reiterates Costco as a buy. By the way, they say that Costco's reported March same store sales excluding gas on a foreign exchange adjusted basis up 12.2%, which includes 1.5 to 2% benefit from an incremental day year over year, accelerating from 10.6% in February, while inflation remained relatively consistent month over month and better than consensus as 9.3%. I'm really surprised that they're reiterating Costco as a buy despite the valuation being really, really high for the company right now. JP Morgan reiterates Netflix as overweight. We got Evercore ISI reiterating HP as outperformed now that the catalyst for Warren Buffett is out. We got Wells Fargo reiterating Bank of America as a top pick, and we got Citi initiating Roblox as a buy. We also got Citi initiating Unity Software as a buy, and Oppenheimer reiterates Tesla as outperform. And then finally, we got Piper Sandler upgrading Occidental Petroleum. JP Morgan reiterating Robinhood and Coinbase as market perform, and Barclays downgrade Ford to equal perform on the day. So once again, welcome on board, everyone. We do have some members of the Fed speaking once again today. So that's been kind of like a busy week of Fed members coming on board, kind of addressing their stance on monetary policy, on interest rates, on inflation. And that's obviously what's caused the majority of this fear. And the last couple of days have been very brutal, both 2% plus days for the markets, and right now we're starting off once again on a very, very weak footing with the Nasdaq down close to 30 basis points here on the day, with the 10-year yields pushing up to over 2.633%. So we continue to push higher with the volatility here jumping close to 2% again. So we are pushing a little bit to the upside, with oil prices now starting to break down, so now trading under $98 a barrel for crude, and Bitcoin seeing a little bit of recovery here past 44,000, and Ethereum also back over 3,200 at the moment. So we're going to do a quick poll here. So let me know what you guys think about the markets today, where the sentiment is. I was listening in on Jim Cramer earlier on CNBC. They actually trimmed Amazon, so they've been selling Amazon lately for their charitable trust. And they do believe, I think, Meta and Google out of the FANG names being a very, very low valuation, as I'm sure you guys already know, those two companies. But let me know what you guys think about the markets today, the sentiment, and where that is for the day. So green, red, and flat. All right. So Jeff, what do you see about ZIM and FDX, please? So ZIM, I've already stated my opinion. I obviously didn't expect this rally to continue forever. When I put out the video, I mentioned that, looking at the deltas, looking at the options chain, it was almost guaranteed that the stock was going to sell off after the ex-dividend date, right? Because many people were holding on to this stock because of the dividends that they were expected to pay out, which was a ridiculous number, close to I think $17 a share. So that yielded you about 22%. So obviously, we saw a big gap down here, 12%, 13%, but since then it has definitely sold off, breaking down below $62. So again, their growth is difficult to replicate. I've done a video on ZIM, so make sure that you do check that out, kind of doing that entire fundamental technical analysis on that company. So make sure that you do check that out to get a good understanding on what the fundamentals are and how much the growth has been for the company on a year-over-year basis. FedEx, let's take a quick look. So FDX here, also trading inside this downtrending channel, making lower highs and lower lows. I think the valuation is fair for the company. Right now trading at 11 times earnings, actually not that much. And price to sales at under 1, and price to free cash flow at 6. How's the dividend yield? So 1.5%. So this right here, $203 is going to be that support level right now to watch for FedEx in the meantime. And of course, if we do get that breakdown, then the next support is going to be all the way down to 175, close to $180 a share. So, all right, let's see. Sam says you can add green for me every day. Yep, so Amazon here, let's take a quick look. So down close to 16 basis points. Apple here, down close to 42 basis points, so coming down to 171. Nvidia, how is Nvidia doing? Nvidia had a brutal sell-off yesterday, down close to 6%. And right now it's down close to 30 basis points pre-market. So markets did kind of gap up a little bit. So from yesterday's low, we did gap up close to 30-40 basis points. But right now we're starting to sell off once again, even though initial claims were the lowest since 1968. So fewer and fewer people are filing for unemployment right now in the US. So this is going to be that 5-minute chart. We're going to keep a close eye on this also at $352. That's exactly where we are right now, pre-market. So we closed down at 352 yesterday after hours. We gapped up today. We pushed higher. We sold right back down to 352. So that's going to be a big battleground here for the bulls and the bears to kind of fight off here intraday. Let's see. So Walgreens, let's take a quick look. So Walgreens was up close to over 1.89% yesterday, so we'll go ahead and turn this level back into a support at 43.75, 43.70 levels. And right now pre-market is up close to 36 basis points. Again, it's a dividend payer, kind of like a recession-proof stock. Because Costco, some of those discount retailers, even Walgreens with their healthcare facility, I think, is going to thrive during a potential recession if you do see that in the U.S. economy, right? So again, Walgreens pushing higher. Of course, their earnings and their downgrade resulted in that short-term weakness, but over the long term, I'm still bullish and long on Walgreens moving forward. So Etsy, I'll take a look at here shortly, but let me just go over some of the comments here. So let's see. So Fed has nothing to do with it yesterday's market tanking, but Cramer does. Cramer said the bear market is over, so tanking was inevitable. That's funny. Right now, I'm really worried about Meta and Google because he has been talking about how the low valuations have been for those two stocks, and he also has been exiting out of Amazon, which I'm very stoked about. Gives me the opportunity to kind of buy more shares. I saw like this really funny meme. Let me just bring that up very quickly. I posted it in our memes channel. Actually, you know what? It's got a swear word in it. It's just a meme. So we know like Will Smith and Chris Rock and what happened at Oscars, but instead of that, the person getting slapped is Chris Rock, and the person slapping is just saying, "Keep my stock out of your mouth." That's the whole meme. It's just Jim Cramer getting slapped, and the person slapping saying, "Keep my stock out of your mouth." So that is like super funny. I posted it in our memes channel, so make sure that you do check that out in our Discord if you're a part of it. So, but anyway, we are seeing some more momentum on the downside here. Obviously, yields continue to push higher. We're definitely inverted right now for the 30 and the 5. The 10 and the 5 also inverted, and the 10 and the 2 did invert, but right now we're just kind of going back and forth here. And volatility is up over 1.7%. By the way, this right here is a quick, I don't know if I still have that. Let me see. Yep, so I removed it. There was an interview between Tom Lee from Fundstrat and Josh Brown at CNBC, and Scott was obviously interviewing it. Very, very insightful. It was a 20-minute interview. Make sure that you do check that out. And Josh Brown, basically, I like his way of thinking. I like his perspective a lot. And then, of course, Tom Lee, very, very tech-oriented. He's almost always bullish. I'm sure you guys have seen his face on CNBC as well. But Josh basically mentioned that, the volatilities was low. He pretty much talked about what we have discussed already, with the addition that there's a shift within the staple names. So you're not seeing all staple stocks actually do well. That's exactly why when we were looking at Walmart yesterday, we were seeing a big rally. When we were seeing Costco yesterday, we were seeing a big rally. Look at that. Costco's up another 1.5%. Crazy move. The RSI is really overbought. But then you come to something like Target, right? Target hasn't moved all that much because of because of what Josh Brown said in that video. Is the consumer's perception right now is focusing more towards generic brands as opposed to going towards some of the big brands for their day-to-day items when it comes to spending, right? Even when it comes to groceries or some of their discretionary items, they're not going to go to Target. They're not spending as much as opposed to as they're going to Costco, kind of buying in bulk, going to discount stores, going to Walmart, and as a result, those stocks are doing well right now. So even within staples, there are specific names that are doing well with these recessionary fears versus some of the general ones that you may think might do well, such as Target and Walgreens and CVS, so on and so forth. All right, let's take a look at, Kramer talked about PayPal as well, so that's good. Let's take a look at SoFi. What's going on with SoFi? Lots of you guys mentioning about SoFi. So SoFi is still in a potential downtrend here, so making lower highs and lower lows. So this right here is still unfortunately the pattern. You can see it very clearly how we consistently just keep getting rejected at those lower highs, and obviously this right here is going to be that lower low to watch for SoFi moving forward. Unfortunately, of course, down to 665, but at the same time, it's got some bullish divergence playing out. And as I've said before, SoFi, when you break down your fundamental analysis into qualitative analysis and quantitative analysis, right? Qualitative is all the business model, the brand, the management, how good the business model is, the potential idea, and how well the company can execute. And the quantitative analysis is all about the numbers, right? All the revenue, all the fundamentals, the actual financials, the earnings, the free cash flow, the balance sheet, all that stuff. And the company has to have both of those aspects in order for it to be a very, very nice deal. If you're simply looking at the qualitative analysis and you're disregarding the fundamentals, you're disregarding the financials, then you're taking on too much risk. If you are simply betting on the financials and the fundamentals and you're disregarding the qualitative, then of course you're taking on too much risk also. You have to find the mix of both. And for SoFi, right now, unfortunately, it's more weighted heavily on the qualitative analysis, right? It's got the potential to be a big player in the fintech industry, in the banking industry. Got lots of users, got lots of expansion and growth, great products, great management team, great brand. But the quantitative analysis, which is the actual revenue, the earnings, the free cash flow, operating leverage, all that stuff still needs to get better for the company. So unfortunately, this market is not rewarding of companies that are not, for one, generating a profitable bottom line, and two, are only trading based on a concept or an idea. So that's why we've seen this strong downtrend. Same thing happened with Palantir. Same thing happened with a lot of companies out there. But that doesn't necessarily mean that these are bad companies to own. It just means that you got to have your exposure in these companies at a low level until those fundamentals develop, until those financials are fully developed. But if, of course, if you choose to buy it at these levels, then the risk is going to be high, but the reward is also going to be very, very high as the company turns a corner towards profitability. And of course, we see that potential spike in the price. But if you want to be a little bit more conservative, you allow the company to report better numbers. You allow the company, you wait patiently for the company to report some better financials and then take a position. By then, the stock may have moved up a little bit more, but at least you are a little bit more conservative and you're lowering your downside risk. So, that's the kind of like the whole, analysis on SoFi right now, lower highs and lower lows. So keep a close eye in this downtrending channel overall. All right, so Brandon says if Kramer is bearish on PayPal, I'm ready to go all in. So yeah, let's take a look at PayPal here. So $111.75. So lots of stocks are obviously selling off here. PayPal broke down yesterday below 113, and right now this right here is going to be that resistance level to watch at the moment. So, all right, let me see if we can find anything on CNBC to listen to, if Bullard is actually speaking right now. So I will see if we can listen in on that. Yeah, no, they're not streaming it right now. Right now, it's still Jim Cramer talking about Berkshire Hathaway and Warren Buffett. So unless you guys want to listen in on that, I don't, but that's what they're talking about right now. God, it's just so funny just like watching him. All right, so let's take a look at some individual companies here. So AMD up slightly over 15 basis points. Nvidia is just about flat. PayPal we already covered. Apple here down about 31 basis points. And then we got Tesla 70 basis points in the green, so pushing higher back over 1,050. Meta Platforms up 16 basis points. Amazon slightly down. And then finally, Square or Block down about 80 basis points. So much indecision on your poll? Yes. So there seems to be a lot of indecision here. So 45% red, 41% green, and 15% flat on the day. So getting a little bit of indecision. A couple days ago, if you were to check this poll on Monday, it was very, very bullish. It was very, very green. It was like, 90% green, 90% bullish. And then last couple of days have been extremely bearish. Now we're starting to kind of balance out the playing field where we are 41% green and 44% red right now. So the cash skip with $60 strike, Upstart, good premiums yesterday. That is great. That is a very, very good Upstart put. I should say that, wow, so it did dip down to under $100. So as we were already talking that Upstart was going to make a big move here, so we definitely did see a breakdown here for Upstart. So, $60 puts going to give you a very nice cost basis on the company. You're all the way down here, so you are sitting pretty right now. So that's good. All right, so let's take a look at Etsy. Thanks, guys. Anand, Nikunj, thank you. Appreciate those comments. So Etsy is also making kind of like this symmetrical triangle right now. So lower highs and some higher lows. So, valuations definitely come down for Etsy. 38 times earnings, still a bit rich, 8 times sales, 29, 30 times free cash flow, and about 30 times enterprise value EBITDA. So it is definitely still a little bit of a rich multiple, but that being said, definitely the price has come down. I'd be looking at selling a cash skip put on this also under $100. If it does break down below 110, this right here is going to be that support level. If it does break down, then I'd be looking at selling a cash skip put. I've traded this before. I've had a position in this before. But again, my price target was at close to like $275. I want to say like roughly $300. We got up to as high as $310, right? So we definitely overhit the target. And obviously, I no longer have a position in that stock, but I'm looking at buying once again since it's down close to 60%. All right, in mode, got about 7 minutes left for the markets to open here. So in mode also continues to make lower highs and lower lows. So let me just point that out here very quickly. So consistent downtrending channel here for the company. So we are just not able to break out of this resistance at $40. So this right here, very, very strong resistance here for in mode at $40. However, there is some significant bullish divergence also forming for in mode. So very nice higher lows here for in mode, and we've got some lower lows for the company here. So that's a positive divergence, that's a bullish divergence, which could result in a nice potential breakout to the upside past $41. Do have a covered call and a couple of cash secured puts on this. Very strong revenue growth grower, earnings grower. Valuations actually come down very, very reasonable. 18 times earnings, 8 times sales, and 17 times free cash flow. Balance sheet is one of the best ones out there. So again, you're looking at cash to total debt, which is phenomenal. And share dilution is actually not that much. If you look at it from an annual perspective, only 65 billion to over 80 million shares outstanding. So I like in mode very much. You can see it for yourself. The numbers are there. And the valuation is also very, very reasonable. And the company is guided for about, I think, 20% on the low end growth here. So like I started, thank you so much for that donation. I really appreciate that. When to buy Apple and Microsoft. Apple, I would be interested in buying at sub 130. 155 is going to be that support, but I would be interested in buying Apple around these levels. $130 as support level coming in from October of 2021. Yes, I know that not a lot of people want to hear that because that's obviously way too low, but you got to be patient in this market, right? You got to allow for the prices to come to you. If they don't, there's plenty of other opportunities out there. You can trade options in the meantime. You can look at other stocks. You don't have to get stuck with one name, right? You don't have to buy just this one stock. If it comes down to your buy target, great. If it doesn't, there's over 9,000 stocks to choose from. Microsoft, I'm looking at this right here, sub 240. So this right here, that intersection, that higher low and that support level right here. This right here is a level that I'm really watching for Microsoft. If it gets down there, great. I'm a happy buyer. That's going to be a drawdown of close to about 31%. I think the valuation remains a little bit on the high end for the company at 33 times earnings and just under 13 times sales. So that's the support that I'm really watching at close to 240 for Microsoft also. So hopefully that does answer your question here. So how many stocks you plan to hold in your portfolio for the long term? So I would say like about 20 to 25 stocks is what's ideal for myself. But out of those 20 to 25, I would say like, maybe 8 make up over 85% of the portfolio, right? So those 8 are going to be the ones that I'm really, really confident in over the next 5 years, 7 years, 10 years out. That make up majority of that portfolio. But 20 to 25 is a little bit, I think, well diversified. It's not too much diversification, but it's also not too little that you're concentrated on specific names. But those 8, again, it can be different numbers for different people. It can be 5 for you, it can be 7 for you, it can be 10, 15, 20 for you. Again, no two portfolios are going to be exactly same. Everyone's got a different strategy, but you have to really understand the business model. The research needs to be there. Which you choose to invest in heavily, and that kind of makes a majority of those portfolio. So Alex asks, what are the 8 stocks? I've actually done a video on that for Patreon members only. I've done a video. The title was My Top 10 Big Bets for the Next 5 Years. So those goes over all the 10 stocks that I'm long on, and that pretty much makes up over 85% of the portfolio. That is a member-only private video that you can watch. Link's going to be down in the description below. And on top of that, of course, you get all the other benefits as well. So I've done a video for all the members, and of course, I regularly update everybody on the options portfolio, on the other portfolios as well, and the buy and sell alerts and everything. So you can watch that. That's available. Goes over everything and in detail also. So Babneet, Caddy, thank you for everything. Got to head out, work calling sadly, so enjoy your work. Have a good time. And Thursdays, it's almost Friday, so have fun. All right, so individual stocks, we'll keep a close eye. Right now, the QQQ getting bought up at 352. What do you guys think? Are we going to see another breakdown below 352? Yesterday was a big battleground. We were just going back and forth. I mean, just take a look at this volatility. We went down to 351. We got bought up here 1.35%. Then the sell-off 1.5%, then a rally of 1.6%, and then a sell-off here 1.25%. So just so much back and forth here for the QQQ. So this right here, 352, is going to be that support level to really watch for QQQ. But I want to hear from you guys. What do you think? Are we going to get bought up here? Right now, pre-market, we're literally at 352. Getting buyers to kind of step in here at the moment. So if Jeff asks, if QQQ breaks 352, what's the next level? So the next level really for the NASDAQ, if you go over to the daily chart, it is going to be actually inside this higher low. So, it's got that nice uptrend pattern, higher highs and higher lows. So that's exactly what we covered in our yesterday's market update. So if you take a look at this pattern overall, the next support really is going to be at 340, right? That's where we're going to land if we were to validate this uptrending channel. There might be a support to also watch. Actually, you know what? This is pretty much in line with 340. So that works out perfectly. So there's $340 right here is going to be in line with this support. right? So previously, where we got validated on January 26th, we pushed up and then we saw another breakdown. So that 340 is going to be that next support level below 352 if we continue to sell off. So far, I've been loving these live streams. I've been really enjoying them because these price levels have been so consistent. It's just been really fun to watch. The battle between the bulls and the bears. It's like very, very interesting how we validate some of those levels, and we sell off, we break out. Of course, last couple of weeks we've enjoyed the pleasure of watching these breakouts happen very, very nicely, and over the last couple of days we've seen the quite opposite with significant pull downs, significant breakdowns here for the markets. But we'll see how the day transpires today. So once again, the markets are open. I'm going to switch over to the actual indices here. We got the NASDAQ here down about 18 basis points. We're starting off on a flat footing. We got the S&P down about 14 basis points, and the Dow is down about 29, close to 30 basis points right now. With individual stocks, Apple flat, PayPal flat. We got AMD up over 0.5%, Nvidia slightly flat, Tesla's up over 30 basis points, Meta Platforms is just about 30 basis points, Amazon also down about 2 basis points, and Square is also down about 9 basis points. So yeah, guys, make sure that you drop a like. I really appreciate it. We only have 80 likes with 450 people watching. Come on, just it takes 1 second. Hopefully I can earn that like from you. So make sure that you drop a like so that this stream gets pushed out to more and more people that can join us and kind of share their analysis and their perspective as well on the market. So I really appreciate that. So this is the QQQ. Again, we're watching 352 on the day. 357 is going to be that resistance for us to break out of. But to get there, we've got a lot of work to do. That's going to be an upside day of close to 1.25%. That's actually not that bad. It is very much doable. But again, this market environment where there's so much fear kind of in the markets again, we're seeing a lot of fear once again with the market selling right back down. Trucking Forever, thank you so much. I really appreciate that. Breezy, thank you. Paneet, Dave, thanks. All right, let's just start with the Dow, see how the Dow is doing, and then we'll circle our way. Then we'll move into some of the other names, and then of course talk about relative performance, and we'll talk about the yield curves and all that stuff. So American Express, Goldman Sachs down 1.7% each. 3M selling off here, down about 1%. We got Cisco, Johnson & Johnson, IBM, Nike, JP Morgan, Boeing, Caterpillar, Microsoft. Almost all stocks are between flat and being down. The only ones that are red right now, the only ones that are green right now are Walgreens, Walmart, Chevron, Merck pushing higher at the moment. So Dow is down close to 0.5%. So once again, we're seeing a little bit of outperformance from the NASDAQ relative to the Dow. And then let's take a look at some of the individual stocks. By the way, Josh Brown, also from CNBC yesterday, mentioned that biotech, he talked about this. It was crazy just kind of listening into him because it was like music to my ears. The things that we have been talking about, he mentioned those in yesterday's interview. He talked about biotech, specifically about the IBB and some of the mid caps, large caps, and how growth investors might be very interested in those companies as they are trading at a very low valuation. They have sold off close to 40-50%. And then of course he brought up the volatility, the VIX, and how it has been trading at very low levels. So it's very clear as to why the market saw a 2-day pullback with the VIX going higher. And of course Tom Lee also was in there, talked about how the low for the markets for the first half of the year, maybe even for the full year, is already in, meaning that the lows that we saw from February is the lowest point for the markets in the first half of the year, or possibly even the entire year, according to Tom Lee. So it should be interesting whether we make a new low or not. But right now we're seeing some momentum come right back in. So yesterday I mentioned, in our Discord also, that in this environment, with the VIX as low as it is, 18.5, close to 19 levels, we've definitely seen a strong momentum to the upside, 22%, 23%. Taking advantage of inverse ETFs like SQQQ is definitely an option out there, right? If you want to trade options, if you want to buy puts, or if you want to go long on inverse ETFs, that's definitely an option out there. But if you are going to be short in this environment, don't overstay your welcome, right? Because overall, we know where the markets are headed, considering the VIX, even if it spikes back higher and drops back down, the markets are going to reverse back to the upside. So the only sort of caution that I suggested was that don't overstay your welcome. Obviously, it's a good environment to trade on the downside and be short on a very, very short time frame. Long term, if you do find those deals, you want to be dollar cost averaging at those levels. Because of what we have already seen over the last 2 to 3 weeks, very, very, violent rallies coming in from the market, so many stocks pushing up 40, 50, 60%. You want to be a part of that rally. So, all right. It takes 5 seconds. Okay, so thank you. I really appreciate that, you guys. Walmart at all-time highs. Let's go. That's great. Let's take a quick look on Walmart. So Walmart and Costco, I think they're both just charging higher. Look at Walmart, up to 155. Very, very strong move to the upside here. Costco, let's take a look. It's also at an all-time high. Look at that, $592, up over 1.41%. And that's all because of this big upgrade that Costco received today. So Goldman Sachs reiterates Costco as a buy. I mean, I can't even imagine putting a buy rating on a stock which is, on a technical front, way too overbought, and from a valuation standpoint is trading at 46 times earnings. Like, what goes through these analysts' mind? God knows. ABBV also crushing it. Look at that. So obviously, all back up to all-time highs here. 168, 169 is a level. RSI MACD obviously very overbought. Vertex also pushing up very, very nicely here on the day. Up over 26 basis points. My thoughts on Meta, Diane. So Diane, that's a great question. So Facebook, I've already stated that I am long-term bullish on Meta platforms. The valuation got ridiculously cheap, in my opinion, for Meta platforms. I've done several videos on the company, going over the fundamentals, going over the financials. They've got lots of big projects when it comes to Reels, when it comes to the metaverse, when it comes to the Oculus. They've got lots of big projects that they are working on. Yes, in the short term, the earnings may not grow as much as what they have done in the past because, again, they're spending a lot of money. It's kind of like, Amazon right now. It's going to turn into what's like an Amazon. Guys, give me 1 second. I don't know who's calling me. I already rejected it once, but they're calling me again. Just give me I don't know who it was. But anyway, as I was saying, Amazon right now, they're not optimized for profitability, right? Facebook is not going to be either for the next, I want to say, foreseeable future. But over the long term, I still believe that, Facebook's got a lot of potential upside here, not just from a company's growth standpoint, also from a stock standpoint, considering that it just sold off so much after the earnings, right? So I personally do see it as a 2x opportunity over the next 3 to 5 years. We'll continue to buy it sub 200. We'll continue to hold it, and metaverse, in my opinion, even if it's not going to be as big as what people anticipate it to be, it's going to be something, right? It is going to be at least something, and it is going to be a part of our lives, in my opinion, somehow. So that's also something to look forward to. All right, look at this big push higher here. I mean, this is just a really, really strong move to the upside. It says my internet bill is due. It's funny. But yeah, lots of stocks here pushing higher. Facebook's up over 73 basis points. AMD up over 1%. PayPal's up over 1%. Apple's up over 30 basis points. Amazon's up close to 1%. Tesla's up over 1.5%. And Nvidia also up over 78 basis points right now. So QQQ, look at that. 2 consecutive green candles here coming off of 352. So very strong amounts of buyers kind of stepping in. So Harpreet, how is Facebook in Meta but not in crypto? They should buy crypto. I mean, Metaverse is kind of like their main goal right now. That's one of the reasons that they changed their name to Meta. But that's going to be where they are going to be driving most of that investment moving forward. Crypto, they may look into that, they may get into it, but right now I think the main goal is to really fully build that infrastructure when it comes to the metaverse. Brandon says margin call. I am probably the one with that much. I'm very conservative, so I've never used margin in my life. Yeah, so I never trade on margin. I only use cash. That's why even the option strategy are way too conservative when it comes to cash secured puts and covered calls. So yeah, I'm not gonna get a margin call if I don't use margin. So Tony says, nobody seems to care about the metaverse. It may prove to be the biggest corporate blunder of all time. It could be. I mean, they're definitely spending a lot of money, and it is a big bet, right? So, Monish Prabhai also mentioned this about Facebook. It is that think of the metaverse that they're building as a call option, right? It is literally something that you are getting on top of the core business. Because if you look at the core business for meta platforms right now for Facebook, even that is very, very cheap. Even that is trading at 14, 15 times forward earnings. When you've got companies like Coke or McDonald's or Costco trading at 30, 40 times earnings. So even on those multiple compressed bases, the core business remains undervalued. And that's really what my bet is. The metaverse is like a call option. If it works out, great. If it doesn't work out, the core business remains strong, right? The core business is good. Free cash flow is coming in every single year, strong revenue growth. Every single year they've been able to do 20+% growth. Same thing with Amazon. So, that's the way I'm looking at it. If the metaverse works, great, there's going to be even more upside. But if it doesn't, the core business is enough, in my opinion, for it to double over the next 3 to 5 years. All right, so let's take a look at some of the stocks. So Ed, you still buying VUG? Yes, I haven't bought in a while, but I will be buying once again very, very soon. I will continue to kind of dollar cost average even further. So yeah, right now it's just about up over 34 basis points, kind of like in line with the markets, obviously, with the NASDAQ specifically because it's a growth ETF. So it is down close to about 13.5%. So I will continue to kind of DCA into this stock. All right, so that pre-market resistance is somewhat playing a role here at 355. That's the level to really watch. Also in line with that yesterday's high, we got rejected a couple of times, and if you go back, that's also been a support here. They are validating at $355. So that's going to be that next level to watch. So all right, let's take a look at Intel. So Intel here, it has been selling off the last couple of days. Obviously, it had a huge pop once they said that NVIDIA is going to be looking at buying from Intel once their foundry business is developed. But 56.31 is going to be that strong resistance to watch. Support level is going to stay put right here at close to $47.50, $47 a share. Right around the $43, $44 right here inside that green rectangle is going to be the level to watch. So if you go over to the weekly chart, you'll notice so much consolidation for Intel. Since 2018, the last 4 years, Intel has just gone back and forth, back and forth, back and forth in between that range. It's kind of like a swing trader's dream right here to find a stock that's just trading in a consolidation pattern. And you can buy it, at that support, obviously sell it at that resistance and just kind of repeat the process over and over again. So right now, almost at support at $44, $45, resistance near term $56, all the way up to $68 for the company. Here we go. We're starting to see some selling pressure here come back in. But let's just run through our watch list and see what's actually moving. Let's start with the reds first. All right, so we got SoFi. Wow, SoFi down over 8%. Was there a catalyst that I missed out on for SoFi? Is there something that they announced, or we didn't get a downgrade on the stock today? Or is it just because? Let me see. So this is April 7th. So down 4% after saying it expects 2022 adjusted revenue and adjusted EBITDA 1.47 billion and 100 million respectively, following the federal student loan payment moratorium extension from May 1st until August 31st. Okay, so all right, so deferment of those student loans guiding lower on the 2022 adjusted revenue and EBITDA. So revenue 1.47 billion. Okay, so that's the big catalyst. So 1.47 billion for 2022. We're coming off of revenue of 1.09 billion. So let's just do the math here. 1.09 divided by 1.47. We're looking at the opposite way. 1.47 divided by 1.09. So we're looking at about a 34, almost 35% growth year over year. And if you look at the market cap, 7.4. So we're looking at 7.4 divided by 1.47. That's about a 5 times sales right now for the company, which is actually not bad. Not bad. 5 times sales for SoFi is not bad at all. But, you know, unfortunately, it is selling off. So let me just take a look at the average cost here for SoFi shareholders. Again, this is not going to be live. This is actually going to be as of yesterday. So as of yesterday's closing price, we've got the average cost among all SoFi shareholders at $10.12, with about 18.5% currently shares that are profitable right now. So 10.12 is actually the average price on all SoFi on an average basis for all investors. So that's going to be right here. There's a lot of overhead supply at that price at $10.12 right there. It's actually exactly at 10.12. There's a lot of resistance for SoFi, right? So you'll notice that we have gotten rejected 3 times. Once here, once over here, once over here. Because remember, 10.12 is the average price every time it recovers from 772. So this is what happens. SoFi was over here at 790. This is the average price, average cost. This is the average among all investors. That's how much the cost basis is. Every time SoFi recovers a little bit, it sees that overhead supply. People want to get out because they're broken even. They want to minimize their cost basis. That's the overhead supply coming in from the top. And then as a result, it rolls over. Second time, same thing. Third time, same thing. It's just happening over and over again. That's the overhead supply sitting for SoFi at this price point at 10.12. But unfortunately, this right here is going to be that next support for the company. As you know, we talked about it, close to 675, 680 levels for SoFi. All right, so that's that. Then you got Astrospace down over 4.8%. Neo is down over 3.7%, so just over $20. How's our Chinese stocks doing? So Chinese stocks here overall, we've got Alibaba. Alibaba down over 2.4%. Neo is down over 3.5%. XPeng is down over 2.5%, and Li Auto is down just about flat. Li Auto is not down that much. So Chinese stocks all red here also on the day. All right, moving along, we got Peloton, Robinhood, Tencent, Fubo, DraftKings all down 2% each. Upstart here, $94. That's where we are for this particular stock. Starbucks, Marathon, Coinbase, seems like the whole market's turning at the moment. So Dixon, your expectation of CPI data next week, another record high? I do think it can be, because like I said, the March inflation numbers will price in this increase in oil prices, right? So if you come over to February 28th, you come over to March 1st. March 1st, crude was sitting at $95. Look what happened over the next 4 days. It went up 34%, right? It went up to as high as $129, $130 per barrel. So that was a big increase in oil prices. But since, obviously, we've seen a little bit of a pullback, then a rally back higher. So that, could price in for the March inflation numbers. That can come in a little bit higher than, in my opinion, we will be over 8% on a year-over-year basis. But like I said before, towards the back half of the year, after June, July, August, is when I really start to see inflation, stabilize a little bit and then really start to pull down on a year-over-year perspective, year-over-year basis. So Tesla's staying green. Tesla's still up over 1%, close to 1%. Nvidia down 1%. AMD selling off. PayPal selling off. Amazon now red. Meta Platforms now red. Apple is also now red. And Square also down close to 1%. So back to the good old glory days of 2022 first quarter, where the markets just seem to continue to sell off, and sell off. It was just like the last couple of weeks was like a psych from the markets. All right, so let's see. So Ken, how do you get that past overhead supply time massive catalyst? So Webull has this great feature where you can go to the analysis tab and you look in the cost basis for every stock. So it'll tell you like on average what is the expected cost basis on that stock among all investors out there, and based on the total shares outstanding, how many shares are currently profitable versus how many shares are currently red on that particular stock. So it's a very, very cool feature. And based on that, when you have the average cost, you can try to understand where that overhead supply is going to be for that company. And for SoFi's case, it was right at that resistance where we got rejected 3 times, which makes a lot of sense. All right, so we got up to 355. Very, very nice first 10 minutes, and we're right back down to 352, getting down to that support level, retesting that support. So Arnold, isn't it just for Webull holders? No, so it is actually going to be for everyone. So I've actually done more research on that. If you go over to the actual Webull's website, it takes that into account from 13 different exchanges, all the exchanges, right? And it takes that into account to give us that information. So few people have mentioned that before. That's only for Webull holders, only for the Webull app. But if you go on the website and look at where they're getting that data from, is from 13 different exchanges kind of compiled together. And if you think about it, they're giving us the data for all the shares outstanding and of which percentage of them that are profitable. Obviously not the entire share float is being owned by Webull investors, right? It's kind of spread between all brokerages all over the world. So it goes over 13 different exchanges that they kind of compile that data from. But again, it's not gonna be super accurate, right? It just gives us a good idea as to where the average cost is. So some of the software cybersecurity names doing much better. So you do have NetEase, not NetEase, but Cloudflare. So NET is doing well, pushing higher. We got CrowdStrike up over 2.5% on a day like today, and we've got Zscaler ZS pushing up. That's probably because Dan Ives has been talking about cybersecurity. And he is bullish on cybersecurity right now, software and cybersecurity. That's why all these stocks, Ping Identity, Fortinet, Zscaler, CrowdStrike, they're all up 2%. Okta is the only one that's struggling a little bit. And there we go, 352. We're back higher from that support. It's like back and forth at that level. Look at the last 24 hours of trading. Look at the last 24 hours here. Literally in this range of consolidation. There's just like so much confusion for the markets where we just continue to bounce off of 352 and get rejected at 355. Bounce off of 352, get rejected at 355. It's just, but even yesterday, I can't even imagine. Look at this volatility intraday. Yeah, so far the QQQ has been holding up that 352 support. I agree. Very, very nicely. Brenda says Dan Ives is the pumping king. Oh god, we've had him on the channel before. He's very, very logical with the way he sees things. He had a buy rating on Apple at the time. Same time last year we did an interview with him, and he had a buy rating on Tesla also. So both of them actually played out very nicely. So he's been covering tech for over 20 years in Wall Street. So definitely he's got lots of insights, lots of analysis. Do you see all-time highs across the board this year? Great question. Let's just go over to the NASDAQ. How much do we need to go up in order to hit a new all-time high? For the NASDAQ, it will be 17%, which is actually not that difficult. It's not that hard for the NASDAQ to go up. S&P is even lower. I think it's less than 10%. S&P only needs to go up 7.5% to hit a new all-time high, which again is not a big deal for the markets. But you're entering into an environment where this is like a transition year, right? Up until 2021, it was all about quantitative easing. And right now we're going through a big transition for the markets, right? We're going from QE to more tightening, more aggressive monetary policy where interest rates are going to be high. Again, going back to our dot plot that we covered at the beginning of the stream, right? So if you look at this dot plot, you know where interest rates are expected to be from the FOMC members, right? 2023, you can bet interest rates are going to be really high, between 2 to 3.5%. 2024, interest rates are going to be between 2 to as high as 3.5%. So those are some of the numbers that are expected from FOMC members, from the Fed. And over the long term, they're expecting rates to be between 2 and 3%. Now, that's what the market's pricing in, 6, 7 rate hikes. Now, there's a couple things that obviously can, the bullish scenario, the most bullish scenario right now for the markets really can be that inflation on its own starts to come down. Inflation on its own starts to stabilize and comes right back down over the next several months, right? So March obviously comes out next week. We don't expect inflation to make a big dent at that point, but after June, July, August, September readings, we get inflation come right back down, and then the Fed lowers their forecast for raising rates because guess what? Inflation is coming down. It's stabilizing. It's getting more in line with Fed's objectives, which is 2% long term, and the Fed doesn't have to raise rates as aggressively as previously anticipated. And then that's going to set up a very, very strong bullish environment for the market. That is probably the most bullish case scenario for the markets right now. But it's also the least likely because why would inflation come down on its own? That's open for debate from all of you guys, right? There's any signs you're seeing, if you're seeing, I mean, used car prices have been coming down the last couple of months here. Oil prices, that's always played a big role, but after a certain point, you've got demand destruction, right? A lot of people are going to move away from oil combustion engine vehicles over to electric vehicles, and there's not going to be as much demand for gasoline, and the prices will have to come down. So those are some forces still at play, but is that going to be enough for inflation to come down? That's still yet to be seen over the next couple of quarters. But that is going to be the most bullish scenario I can think of, is if inflation comes down, Fed eases on their aggressive monetary policy, and that's what's going to create a very bullish environment for stocks. Because right now we're already pricing in 6 rate hikes. So Brandon says, I've been looking at the used cars for 2 years straight now. The prices have been coming down in the last couple of months. Yeah, that's interesting because, if you look at prices overall for a lot of commodities also, they've been selling off, right? Oil prices obviously have their own story because of Russia's invasion of Ukraine. But if you look at some of the other things, obviously wheat prices also hit a very, very high price point of $13.45. They're down about 24%. Aluminum, same story. It's down close to 15%. Palladium, it's down close to 37%. And then you come over to copper futures here, from 5 down to 470, down whatever it was, close to 7%. And then lumber prices. Lumber was a big thing in 2021, right? So it went up all the way to 1723. It dropped 73%, and then it rallied back in August, close to 200%, and more recently, it's down about 35%. Right now, it's selling off over 6%. So. All right, so we're going up for that second retest on the day, $355. Second time's a charm or third time's a charm. We're going to find out here very soon if we get that breakout past 355 and, of course, past 357. But this is going to be the level to watch. Quick, what do you guys think? A breakout coming or another rejection? Even with stocks, you'll notice push higher, sell off, push right back up. All right, let's go over to the banks because I feel like JPM is getting cooked right now, somebody says. So JPM down 1.5%. I mean, if you take a look at all the banks, they're down. Goldman Sachs, Morgan Stanley, Citigroup, JP Morgan, Wells Fargo, Barclays, BlackRock, Visa, Bank of America. All of them are down except PayPal right now just about flat, and Square is slightly up about 70 basis points. So all banks are slightly selling off here. But yes, quick, let me know. So we got Luca, breakout, Marcel, breakout, Ernie, breakout. Kunda says rejection, Matthew says flop. So it should be interesting where we end up here again, fighting that level. Yeah, XLF is dropping. A lot of the financial stocks are selling off, so they're obviously selling off quite a bit. So JPM 127 is the level that I'm really watching. That's the next support. 127 right here. So for some of the dividend stocks that I'm holding and I'm looking to add more on, JPM 127 or lower, even 120, sub 120, I'd love to buy more. Walgreens sub $40. If it gets sub 40, would love to buy it. Intel around that support. If it comes down to lows of about $44, $45 around those levels, would love to add more shares of Intel as well. And 3M is just more or less consolidating right now. So, sub 140, would love to get it. Tesla's ripping. Getting up to 1,072 right now. Nvidia, AMD also reversed very nicely. Meta Platforms barely green. PayPal is down about 66. Palantir's flat, down about 45 basis points right now. Yeah, banks I think will give us a lot of opportunity. Considering, looks like we're getting a breakout here. Almost. Look at that tag. I mean, come on. High for the day, 355, now 24. Okay, there we go. At least we're breaking past our pre-market high. And yesterday's level of rejection. But again, much better resistance sitting for us at 357. That's going to be the next resistance level to watch here for the NASDAQ. It's only one of the many resistance levels that the NASDAQ needs to break out before we finally can take a breather. If you keep going up, it's just resistance after resistance. Next up at 357, then we have 361 to worry about. Then we got 370. That's going to be the big one. So that's the pivot. It's going to continue on this uptrend. These two are really just over the short term, breaking past those recent previous highs over the last couple of days. So got a long way to go. So what would happen to SoFi shareholders if SoFi was bought out by a bigger bank or something? It would depend on the deal. If it's a cash deal, shareholders would get cash. If it's a share stock plus cash, then you'll get some cash, some stock of the share of the company that's buying SoFi out. It really depends largely on the deal, so I can't really go over specifics, but depends on the terms and the pricing, right? What's the valuation? What is going to be the price at which SoFi is going to get bought out? It's kind of fun to watch. Yes, I think it is. That's why I love watching, just looking at the price action here. So what would consider normal markets? Isn't there always an up and down intraday? How would a normal condition look like? Sam, could you elaborate that question? I don't think I understand that fully. Yep, so NASDAQ here more or less is flat, up just over 40 basis points. S&P is up over 12. Dow is down about 44 basis points right now. Volatility is just back over 22, slightly up over 63. Bitcoin's up over 1.2%, not bad. And Ethereum also back over 3,200 right now. Oh, so okay, so you mentioned there's a lots of indecision. So what would a normal day look like? Just straight up. Not quite. I mean, this is just a lots of indecision because of the market's expectation of a potential whether we're going to see recession or not, right? That's why the market's not able to figure out the market direction. What I mean to say is if we have a much clearer understanding of the future, obviously the markets are going to pick a direction. That's where we're headed. So what you saw over here the last several weeks, right? So over here, when you saw the markets going up over the last couple of weeks, right, we've seen a 17-18% rally in the markets. That's the market's expectation of a much clearer future. This obviously was the market's pricing in a very, very tight monetary policy. This was all those fears kind of easing out, and right now we're in sort of like a situation where there's a lot of indecision. We're not clear as to what is going to happen over the next couple of quarters. So that's why we're seeing a lot of indecision in the markets at the moment right now. As a result, lots of back and forth. So InMode's up 3.7%. Matthew, do you own REITs still? Yes, so I do own REITs. In fact, I actually made a watch list today for REITs specific. So right here. So I created a watch list for 5 REITs, and I'm looking to expand this more. I'm going to add more stocks on this moving forward, but I will be doing some more analysis, some more research on some of those companies as well. So InMode up over 3.7%, so that's good. Back over to $37, $40. Very, very strong resistance. We're just not able to break out over that level. All right, everyone. So that's going to be it from me. Once again, thank you so much for joining. I really, really appreciate it. And the markets here are still trying to understand the direction here. We're just going back and forth. Lots of consolidation with that resistance sitting at 355. Support level, watch it closely at 352. And lots of stocks also here just kind of back and forth here on the day so far. But once again, thank you so much for joining. I really appreciate it. We are seeing a mix of both red and green here in the markets, but I do hope that you guys all have a very, very nice green day. Make sure that you drop a like. How many likes do we got? So just under 250, I think. So make sure that you drop a like, and of course subscribe if you're new to the channel. Also check out the links down in the description, especially the Patreon link if you want to join our Discord, watch those private videos and lectures and tutorials, unlock all the features, the buy and sell alerts, options portfolio, regular portfolio, all that stuff is going to be down in the description with a link. So once again, thank you so much for joining. Have a great day.